Hello everyone, I'm Louis from DAP Technologies and nice to meet you. Raising money is the number one skill of an entrepreneur. How you can develop this skill to benefit your business. In this video, I will share some incredible knowledge for raising money. If you know this knowledge, it will be very helpful for increasing your success rates of raising money. Value created from freedom and time. Any freedom you abandon and any time you spend, this will create a new value on your work. Opportunity. Founder with an idea in the startup and leading the team to make a valuable idea to be a huge commercial value business, create value from 0 to 1 and amplify the value from 1 to 100, even more. It creates value directly. The objective opportunity is project. Funders have opportunities and seek capital for growth. Capital. Investor could accelerate and support companies to growth with the systematic and money management, helping funders to amplify the value from 1 to 100 and even more. It creates values indirectly via opportunities. The objective capital is money. Investors have a capital and seek opportunity for return. There are many funders and many investors on the market. The main principle is capital seeks profits. The free markets, because capital seeks profits, good opportunity will get to the capital, and markets is value-oriented. Free markets will let opportunity and capital meet easily. There are different milestones while raising money. Angel round, seed round, A round, BCD round. While the angel round, maybe you only have an idea, and the seed round, you just build your team with the idea. And A round, you may have the prototype and finalize your product. A round is the significant milestone, and if you need more money before A round, maybe you can run a pre-A round, and if you need more money after A round, you can run an A+ round. Safe? Simple agreements for future equity. Receive money now and issue the stock later. It's the new way for raising money from YC. It's easy and minimum the negotiation with investors. Equity financing. Equity is too slow and can be expensive. It requires lawyers, and you are selling the piece of your company. You will give the investor some rights. Please read everything on the paper when you raise money as the equity financing. Common shares and preferred shares. Who will get the money and at what order? Runway. How long time left to burn out your money? Like 12 months, 18 months. But too long runway is the waste of equity. It will make the company not aggressive to move forward. Why you need to raise money? The company in growth sector, you need to grow fast. When you need to raise money? When you need it, but the best time to raise money is when you don't need it. Generally, it will take approximately 6 months to receive the money in the bank account, so we recommend to start to raise money 9 to 12 months ahead before you really need it. How you raise money? Telling the story of your startup to angels and VCs. A story with interesting, believable, reasonable, memorable, telling the future. And how much money you need to raise. To do the math. Assume that it is the last time you raise money. For example, I want to hire 3 engineers, 2 sales guys, 1 HR, running the company for another 18 months and produce the prototype. Make your data trustable. How will the money be used? Describe the distribution of the money, like to hire new employees, office renting, material cost, R&D cost, test cost, prototype produced. If you were not able to raise money, how would you do? Profitable capabilities, the risk management, multi-channel for raise money, keep yourself agility. We are the investors. How to communicate with them? networking, searching on Google, on LinkedIn, and send cold emails or recommendation via the people you know, and what kind of investors are preferred, like mentor, value added, the networking and other resources they have. Do you want to take the responsibility of the money be raised? Absolutely. You do take the responsibility. Every amount of money spent will be worthy, result-oriented, telling the truth. Money is the trust from the investors. Be integrity. Why you? How unique and different you and your ideas are. The core value, the core competing capability to show you are the best to do this business. Do you have enough knowledge, integrity, tactics, and experience to do this business? Show your knowledge, integrity, tactics, and experience to illustrate you are the best to do this business. What is the value of your company? To do the math. Pre-money valuation and post-money valuation, the money raised divided by the equity is the post-money valuation. Your AP value, team value, know-how, the present value, the value in the future, the potential value, the profit capabilities, market size, business model works, growth rate, the customer network, anything to prove your equity is worth the money. How much you are selling, the dilution. Generally, the C round can be anywhere between 10 to 30%, and A round can be 15 to 20%. It depends on the situation, like the round size and valuation. Are you building the business to sell or for IPO? Some investors select to sell and someone for long likes to IPO. Depends on the situation. There are no perfect answers exist. It depends on the situation. Please do this case by case. Idea solves the practical and the real problem. Team building. A great team is always matters. Team should be knowledgeable, experienced, and diversity. Business plan. Clearly a profitable business plan is the first impression of funders by investors. Storytelling. A good presentation pitch skills is the best for funders. Have a passion in your business. Win-win relationship. In the story, you need to build a win-win relationship between funders and investors. Telling the story of the future where the investor will care about. Talking with investors again and again and again. The more you practice, the better you will be good at it, until you get a yes as an answer. Return. Capital is profit. Can return my fund? Less than 10 times the return will be no interest by investors. Risks. Make a risks list. Risk management and how to reduce these risks. Integrity. Telling the truth. Don't use over-optimized data and cheat. Let investor clear about the situation. The equity is worth the money. Success rate. Funders' leadership and business sense. Team building, knowledge, strategy and tactics, executive power, experience, diversity, flexibility, endurance, indomitable, attitudes to failures, keep learning. Situation awareness, keep communicating, updating weekly or monthly, building trust and partnership. Ideas of the practical and the real problem. Clear vision. The whole team understands the direction and mission of the company. Team building. Team building is really matters. Make a good BP to introduce the opportunity clearly, as simple as possible. Investor list. Make investor list to contact them one by one, record the feedbacks and analysis the data. Find a lead investor. A good lead investor has sense for the markets and will determine the pricing and will also help set other key terms. A lead investor will do the diligence on you or your company. They will investigate it and identify any issue that could issues for your company. They will clean up anything amiss on the legal or cap table. A good lead investor will help you find the rest of the capital you needed. Risk list. Funders need to know the relationship between risk and money. Make the risk list. Funding team risk, product risk, technical risk, launch risk, customer acceptance risk, sales risk, revenue risk, and growth risk. Put the risk list in the business plan and clear up the risk one by one and tell the reasons. Then you can reduce the investor's concerns. You'll pick away the risk in the different milestones, like the risk of A round, the risks of B round and C round, and your business growth. And you point out your money spent on the pick away of the risks. Let the investor know the money was to spend available. I spent money, but I reduced a lot of risks. Money distributed. The systematic way to show that's how the money was distributed. Make a compelling financial plan for how you will use the money. The plan should show an interesting and high-growth company at the end. Clearly about every detail of term sheet, especially when raising a convertible notes in term sheet. This can be a potential risk if the funders are not clear about the rules. Legal and accounting issue is also important. If you don't have good knowledge about that, you need a legal and accounting consultant. Generally, investors are clearer about the term sheet than funders. Some terms will even have potential risk for funders, and they don't know about that. So, be careful about the paperwork. This means you really raise the money and accept the money. Before the signature of the legal documents, make sure you're clear about every detail written on the paper. Negotiation skill is important. Negotiation is the value exchange. If you ask to abandon some value, you should be compensated in others. Do a right math. Like hiring employees, the package cost will be 25 to 50% higher than the salary. Pre-money valuation plus the money raised is the post-money valuation. And the ownership is the money raised divided by the post-money valuation. Please take care of this math. Reputation. Nothing is more important than reputation. Please keep a good reputation. Build trust and partnership with investors. From don't know each other to the partnership, you need to build the trust. It is not 1 day or 1 month trust. It is 10 years, even the whole lifetime trust. Fully understand each other's expectation. Don't have a missed expectation between funders and investors. You need to drive your rounds to a close. Work with your lead investors to figure out a reasonable amount of time to close the round. You have only one close or multiple closes for the round. The value of having a firm closing date is that it can force its investor to have decisions and give them a timeline to finish the work. If you raise Series A money, you also need to think about what investor for Series B would ask. The target, the milestones for every series should be clear. While seed investors might make as many as 8 to 10 investments per partner per year, most Series A investors only make 2 to 3 investments per year. Take care of the cash flow, the relationship between raise money and spend money. Overcapitalized will let company make wrong decisions. Remember what Steve Jobs said, stay hungry, stay foolish. The startups need to move quickly. The real priority is from time, not money. If it overcapitalized has a too long runway, the startups will not be aggressive to move forward. Simple deal. If you don't have the real deal, make a simple deal. Tell investors your business works and how much money you can get from the deal. Make the numbers and the data trustable. Investors hate saying no, because every time they say no, they close the opportunity to invest in a great company. Before rising, make a good business plan, make an investor list, make a good presentation and practice many times. Prepare yourself ready. Raising money, organize the roadshow, find a lead investor, telling your story and Q&A with investors, documentation, the feedback, and optimize your pitch, negotiation for details of term sheet, carefully for every detail before you close the deal, step by step from introduction, follow-up, decision meeting, diligence to close the round. Last but not least, building trust and a partnership with investors. After rising, go back to work, build business growth. Keep communicating with investors, updating weekly or monthly. Start to prepare your next round. Generally, it is best to take 30 to 50 investor introduction to close the term sheet and receive the money. Raise money is the deal. Want somebody to know you invest in you. The invest in what you can make is amazing. Your job is to demonstrate you can do these amazing things to be reality. Getting the money is not winning. You just get the starting line. Your work is to build business. You try to build something sustainable. Actually, raise money is the easiest thing in your business building activities. Recruiting, marketing, products developing, business developing are more difficult than raise money. If you do other activities with perfect result, the money will come to you automatically. Remember the rules. Capital seeks profit. We're starting the financing programs to develop the DAP project management system, which is the SaaS system used big data and cloud technology. With the system, we can achieve the project management collaboration and project monitoring, situation awareness for all parties. The first application scenario will be international trade of aviation and will be expanded to other scenarios while the system develops maturely. It will build a good expertise, know-how, and credit system for the international trade and the project management. Making other success is our mission. We welcome the investment overseas and credible coding guys to join us.